Alright guys, this was the VIX 75 1S. We modified the entry from the higher time frame, which is the 4 hours earlier on. If you check the perfect POI modification from the H1, H4, I told you that price, the signal said we should do what? We should buy. That means using the H1 POI give us a buy signal, right? A buy entry signal. For those of you who are following up, I'm coming. Let me check. Let me use this. Anyway, if you watch the first video, he told us to buy that particular pair, right? That is the VIX. We should buy the VIX 75 1S. But as at when it said we should buy, price was down, and then we have a bearish order block around this zone here. So immediately price break and close above it, right? Because you can see we have a break of structure towards the downside, right? Making this was the high that led to that break of structure. This was the last swing point that led to that break of structure. So we consider this area as the supply zone, which led price to that OB, which took out this. Okay, good. You can see it here that we should buy this particular pair on the H1, and then our entry time frame is what? M5. H1, then we are using M5 as our entry time frame, and the only way we can use M5 as our entry time frame is to come and check or look out for a valid POI. Already we cited it on the H4 that price said there's a price at the H4 demand zone, right? Price at the H4 demand zone. But due to the fact that the range is too wide, because if we should go back to that H4, let me check if we can see something from this end. Okay, if we should come back to this H4 where price is there's a possibility of buying from, because you can see the H4 demand zone right here. I don't know what is wrong though. If you try and watch the first video, perfect POI modification. So if we should sell, we want to buy, because this was the break order block. For some of you who are new to trading, you must choose it. Maybe you might say, okay, this is where we have the massive move. That means the impulse move which led to the break of structure. So we have our fair value gap and every other thing. So if we should go further to put or place our buy limit at this point, at this very point, right? Place our buy limit at this very point, price would have ended up taking us out of that entry. Are you getting my point now? Price would have successfully come, mitigate that point, take us out, and this would have been our what? Stop loss. You see this level here, this extreme point, this is where we will have suggest to use as our what? Stop loss. And you can see the range. So you will have been in a massive drawdown. If care is not taken, your account will have even blow off or probably shut down by now. So instead of doing that, we went down to our M5 because we already got a buy signal on H1. So to modify that H1 is we are going to use M5. And as at when I recorded that video, if you go and check, price was still within this range. So price went, created a breaker block, which it came to mitigate not quite long. You see, what I want you to understand is that you see that price created an inducement, which is very close to our POI. You see this inducement, right? Which we call transactional inducement. This now increases the chances of this POI holding. Now, in the first video, I was targeting the H1 um what is it called, key level, right? If you watch the first video, because based on my calculation, I know if price is going to buy, we expect price to go and retest that H1 key level. But using this system and doing the right way, so that you don't come and tell me that it is what I use or the way I explained it, that was why you did it the same way. Now you can come and then here is the highest point, right? You can see there's still liquidity resting at this point. Here was the highest point price got to, and this exact point was the lowest point price got to. So which means on this 5-minute time frame now, we are trading within this range, and this is how it should be. That means in the professional way of trading. So we are trading this buy within this range, this high and then this low. So if we are taking your entry from this point, you can then target here as your high. Now, if you are scared, you can use break even. As price keep moving, you move your stop loss, so that if there's possibility that price fail to continue to buy and then reverse from that point downward. Are you getting now? That price reverse from that point downward, it won't come and take you out totally. That means making you not to earn any profit. Are you getting it now? That means making you not to get any profit. So the best thing you do is you can use break even to follow the trade up. We didn't just open this buy. The system gave us a signal on what? On H1 that we should buy. And I told you that you don't just buy because the system said you should buy. You proceed further to check what is the situation of price on ground. That means where is price currently? On the H4 and the H1, we cited a demand zone, right? But if we should go ahead and place our buy on these two high time frame, we will end up having issues with drawdown or probably even losing the account, because most especially these synthetic indices, they are very, very volatile. Are you getting me now? These synthetic indices are very volatile, that the way the little move can give you profit and it also can give you losses. It can end up in a massive loss. So for you to be safe, make sure you modify whichever POI given to you. And if your H1 is saying buy, make sure you find a valid POI, not the one resting at a liquidity zone. Why am I saying a valid POI? If price should break below this M5 demand zone now, maybe price decided not to go up and then comes and take us out, automatically we understand that, okay, maybe price want to continue to sell all the way down. Already we cited that price was at a premium zone on the H4. So we can easily decode what is happening. But if there is any other demand zone below this zone currently, that means below this our entry zone now, that could be a liquidity, because what it means is that this retracement is the same inducement created, this transactional liquidity created here. That is what we are trading on. That's why I say always check. Always check, and don't be the type of a trader that will be chasing trend, right? So far you've cited the best place to do your transaction from. You have the conditions in place. You find a valid pure zone which has not been mitigated, which price created and has not taken long and has not been mitigated. Wait for price to come to that zone. The advantage is that you have a very little stop loss. That means the stop loss won't be too wide, and then you won't be trading, or you won't be going after the trend. You won't be running after the trend. Let the price come to where you've cited, where it has given you, or where you cited the institution flow. Let price come there, mitigate it. Then if it takes you out there, you will lose little, and then when price come back next time or create another valid zone, you will be able to recover. The reasons why most of you are losing back to back is that you don't have clarity of what you are doing. You are just placing based on your emotion. You are placing trade based on your emotion, and this is what the system want to correct. Are you getting me now? This is what that error that you don't even have idea of where you are buying from, where you are selling from. That is the reason why this system is developed to correct those errors. Please take note, because I don't want a situation whereby you come back and tell me, oh, I bought the system and I was still losing. No, you shouldn't be losing if you follow the instructions. You shouldn't be losing if you apply the approach. This is why you should always watch how price react at Zoom. There was a video I made regarding Crash 500, Crash 1000. We're expecting price, no, Crash 500, sorry. There's a spot we're expecting price to return to, but price didn't return and price went up. So in such situation, we didn't chase the price, and at the end of the day, we didn't lose our money. Fine, probably maybe we lose that trade either due to late entry or due to late confirmation. But next time when we see other signal, we'll be able to modify. So check my videos, check my channels, and my check the videos on my channel, recent videos on my channel regarding this A2 system, A2 learning system that I just created for those who want to learn how to trade the forex market. Mind you, it works on every pair, right? Either synthetic, either crypto, either what is it called? Either well trade. For those of you who are using the well trade platform, either deriv, or in as much as it's an MT5 broker, definitely you are going to make your profit from that point. So if we have taken that trade, or probably we have placed our sell limit, you see that the drawdown we had was not too much. I think I was suggesting this point as my entry. So price still came for that to take out the liquidity resting here. Even at that, it still didn't come to our SL. So as price has moved this way now, you could just move your your SL a bit, because don't forget that we are trading with our target. Since we are using M5, this is our ranging, this is our range that we are trading. But if you notice, or you have the foresight that price is possible to break above here and go all the way to the to the resistance zone we cited on the H1, all you just do is keep using your break even to follow it up. Remember I told you that if price break and is coming down, it's going to create some sort of transaction inducement that is not just going to come direct into this our zone that price just came to mitigate now, which is the breaker block we cited. Why is it a breaker block? Initially, before price went up, here was a supply zone, right? Here was a supply zone. It was a very clear information. This has nothing to do with guesswork, because it was clearly noted that the higher low was broken. I seen it. So, and this was the last swing point that led to that break of that higher low, which is this particular swing point. If we had extended the supply zone to this point, we would have lost it, and the system didn't even draw our breaker block around this top here. This was the region the system placed our breaker block. So knowing too well that price will definitely come back to mitigate the breaker block and then push all the way up. I just want to carry every one of you along so that when you are doing this consistently on your practice account, when you now have any amount deposited on your live account, when you are facing or you're approaching the chart, you won't approach it the way you used to approach it before. So please, this is a training. Remember I told you that this software is not just for you to not just for it to trigger signal for you to buy or sell. No. Apply how you should trade. This is the way people trade. Those people you see making good money on Forex, synthetic indices, or any other trading platform. This is the way they approach the market. They understand that you need to modify areas of interest, especially when they are found in higher time frame. Every POI must have what? A liquidity confirmation. There must be a sort of liquidity transaction that is going to confirm that that zone is definitely going to hold, because if it's not going to hold, we won't see the transaction, right? We won't see that liquidity transaction that there is a POI here, then we can see this. And this is also a liquidity setup. Remember I told you in one of my videos that for those who don't know, we believe here is a supply zone, right? Some will go as far as placing their sell order here. Now, see what happened. Price will come again, take them out, and then continue. So until you understand that every POI has its own transactional liquidity or inducement. Inducement must be certain. Inducement must be certain that it must induce traders, otherwise that zone will not hold. If it doesn't induce trader, automatically that zone will not hold. So in a nutshell, if you are trading, have the range correct. If your range is correct, this is how your range is going to look like. If it's going to be a sell signal, at first you're going to see a price moving towards the downside, move back, that is create a pullback. Now we have a new higher low, yes, a new lower low here, and then we have our higher high here. Then price is going to create a new lower high here. Now price will come and break that lower low, right? Now after price breaks it, it's going to create a bearish order block or a supply zone at this point. Now for price to come back into that zone, we expect to see some sort of what? Some sort of liquidity or inducement. Price will come back halfway. Now what is going to make price reverse halfway? If you are a good trader, you should know that here was initially what the support zone. It acted as a support for price. So price broke below that point. I don't want to go deep into that, but just should in case you want to do some confirmation. Sometimes these are the reasons why we have those liquidity set up. So price will pull back a bit. Now this pullback, it pulled back at first, didn't come to mitigate your supply zone, which means you still have your supply zone intact. And this should happen most especially within your premium zone where we have sell opportunity. So it's going to induce traders to believe price is coming back. Price will definitely come again and then take them out after they have put their stop loss at this point. Now this now is our transactional liquidity point, which gives us assurance that there's possibility of this zone holding when price taps in. Then the next thing you're going to see again, price will come back after creating another internal break of structure within this point. This is going to be internal, not something external, right? Price will now come back, take out those liquidity again, then finally tap into your area of interest, right? Then finally drops down. So if price taps in, here now becomes your range. That means your range you are trading should be, and if at all you for including your stop loss, this point and this low. So this is the range you are trading your sell. Meaning when you take your entry from this point, your target should be this low, and you are out on the trade. So this is what the system is trying to code or program to let you to understand that when you are looking for a sell opportunity, this is how the setup should look like. If it's not looking like this, then automatically it's not going to be a valid one. So you should, and if price even come and take you out, maybe you are using tight stop loss or the normal stop loss, you won't lose much. So there's probability price will come back next time and give you a final zone where you can definitely leverage on. Exactly. So this is what this system is trying to inculcate in your mind. That is why we have the um we have the we have the zones, right? It has a gate entry. This is where you first start to check. When it's come here and you see the system telling you that maybe there's a buy opportunity or a sell opportunity, I'm coming. I just want to show you what I showed you earlier on. Let's see from this point. Yes, this is your gate entry. Every signal will start from here. Exactly. So once you start from here, it draws your attention to the chart. And once it draws your attention to the chart, it now gives you, this now starts making you to ask questions. Where is price currently? Where is price going next? Yes, this is now the questions that start ringing in your mind. Okay, is price here? If no, is price here? So with this little information, you'll be able to figure out where you should definitely do what, buy or sell from. And always focus on new zones. Old zones could act as an inducement which will deceive traders into taking the wrong entry at the wrong point. So I don't want this video to be too long. I believe by now you are seeing the approach on how to follow and modify your POIs and then also take valid entry. When you practice this every single day, you become a good trader. You will be able to spot areas on the chart even if your PC or your system or your software is not there. Are you getting me now? So all those your Fibonacci, Ichimoku mode of trading will definitely come to an end, and then you start trading the way you are supposed to trade, not chasing trend. Wait for price to come, because if I had immediately price broke here earlier on. Now let me show you one other thing again. In that video, this was where I was waiting for price to come, right? If I was busy chasing price because maybe I saw price broke here and I open a buy at this point, right? You know, at first I will be happy that I'm making profit. The next thing I will start encountering loss. The same spot I waited earlier on, believing price will come, was that not where price came and then it took the buy from? So this is why you should always be a trader who has target, who has focus. Don't let the moves in the price of or the way price is moving on the chart to induce you to become part of liquidity. If you are trading this point, you by now you should have made good profit. You can even opt out and then close it. If you notice price is coming and is coming massively with a momentum, you can close the trade short. I'm not saying it's good, but always have a target that, okay, this is where I'm trading, this is the range, because price will definitely come back to this zone to take out liquidity. The only reason why price will not come here is if it want to proceed towards the downside. Exactly, and this doesn't happen all the time. When you have a good setups like this, there are something that happen occasionally, except your calculation is not correct. So if your calculation and analysis is correct and you follow the instruction, I see no reason why you should cut the trade short, since you already see the range you are trading within. That means from here to here. So once price gets close, you can even close it manually, not even holding it all the way down. Exactly. So please, if you've not subscribed, kindly hit the subscribe button. I believe you must have learned one or two from this video. And then if you want to get the system for yourself, check the description below. You see my WhatsApp number there. Ensure you chat me up, and then we can discuss from there. The system is not free, so don't think it's a free software. No, it's not a free software. It has a PDF and it has other features which, if you check the introductory part of the video, I explain some of them, and these are still what we are using to analyze charts and then seeing good results from it. Please make sure you hit the subscribe button, share this video, and then give it a thumbs up, because there is no way you will watch part 1 and this part 2 and you won't understand how to modify POIs and how to take valid entries. So it all depends on the approach you have been using before and how you want to start using a new approach. And if you want to join the mentorship, you are welcome. Just chat me up and then we'll start discuss from there. So thanks for watching. See you on the next one.